All right, welcome back everyone to another episode of Chart Talk. Let's jump right in. First up, we got major indexes here. Let me delete these lines. So we had the Qs last week running up into resistance, and we can see a pretty clear bull flag forming here up at new all-time highs. We've been, for the most part, pretty range bound where the key our key focus has been buying up off of support and selling into resistance. We're in this range up here. You got to really be positioned in these gap downs into support and looking for these days where you're buying back up versus it, which we've done a very good job with. And we're seeing just some tight inside days here. Again, do we push through these highs? Most likely. But this is the first retest of this prior all-time high. Again, day to take notice. Market opens all-time highs and sells off. Not really the sign you want to see for continuation higher. And we saw, the subsequent pull-in again, comically small percentage range that we've been in. 20 points in the Qs. It's a hilariously small percentage range. So we're in this extremely tight range. Again, we probably push through these highs, most likely tomorrow, but I would not expect a bullish engulfing bar through highs. We'll probably see, kind of this weaker action where it kind of tickles through, pushes up, but you don't get that big momentum at this retest. Third, fourth, fifth to 10th down the road, sure. But right now, first major retest, not really the case. Now with the S&P, again, it's a little bit more, in this broader upper channel, but last 2 days, just kind of inside day, end of day today on Tuesday, we had a tiny little push above that inside day. So when you have these inside days like this, you have indecision, and the following day dictates, the shorter term trend. So we had that end of day close push higher. Good to see for the market overall. We probably drift higher into this upper red line here. Now, this has been, I'm going to zoom out a lot in a moment, but this has been the bigger focus for the indexes. So let me get rid of some of these lines here that aren't significant. And we can, if we zoom out a lot, this is the major trend, major breakout stage the market has been in since 2018. And when we zoom out this far, a lot of these, bear markets and corrections look comically small. COVID looks like nothing. The bear market of 2022, no big deal. The little tariff war that we had early in the year looks like nothing on this chart when you zoom out. But we can see this 45-degree channel. We can see this broader bull, market that we've been in, but we're right up here at resistance or very close to it, about 10 points away. We need to understand that this pattern has been holding up for, more than half a decade. This is not going to be the time that it breaks through 660 and we just rocket higher because the market's been strong. In reality, or what we'd like to see is a gradual kind of pull in and base out over the next 6 months or a year, and then we could run back up and we have a lot more room to hit this resistance area. Right here, we are so close to it. Yeah, sure, we might go to 660, maybe even 670 in the SPY, but we're talking, 1-2% from here. It's not this dramatic move. But if we can consolidate and pull in, it doesn't have to be huge. It could be back to 600 in the SPY. Barely a correction type of move, but to set us back up where this isn't the resistance area. Whereas we start to trade sideways, this is now the new resistance area. Maybe even up here is the next resistance area and just gives us more room to really run. Right now, we're just too close to resistance. And this is when things look perfect, just like in April, things looked horrible. But this was the time that we were buying. This was, back in April, market was crashing, market was breaking 500. We had 1 or 2 days sub 500. And that's when we were doing the bulk of our buying and we got rewarded for it. The market's 30% higher off those lows. Up here, we're not getting the broad rewards that we saw during the scarier times. And that's just how it is with the market. Again, even you look back and these highs here, holds on resistance and then has to pull in, base out, and run back up again. And we should expect some similar price action. Again, very healthy. No one enjoys a year of a pull-in, but this channel has been in play. We have to understand that this is resistance. So just want to be aware of that. Again, then we're going to zoom in a bit more. We're going to change some gears into, more of the action for the week ahead. And the big focus has been on my end has been healthcare. Healthcare has lagged significantly in this rally. It has not really done anything. This was when the market was bottoming in April. The S&P is 30% higher. Tech is 20% higher. Virtually every sector has gone on major runs, which is what you want to see in a broad-based rally. But there has been laggards, healthcare, biotechs, they've lagged in this rally. And now all these name or sectors have been or are somewhat overvalued in the short term of the last couple of months compared to sectors like healthcare or like biotechs, which have been breaking out recently. But again, still trying to climb back to their prior highs. Let me get this out of here. Biotechs are trying to climb back to these prior highs here, still not there. You look at tech got back to those highs and has not looked back, has gone on major runs. So we're seeing this with a lot of sectors that have already gone on these big runs. And then you look at healthcare and they're, just basing out here, getting very strong where if these topping patterns, like we're seeing in tech, like we're seeing in the indexes, if this is the shorter term top and we're not going to get this breakout and we're going to get this rollover, it's not going to be this rollover back to lows, but it could be a rollover to retest this prior breakout level that would be completely healthy. And if that happens, and we see this in tech, we see this in financials, we start to see this in a lot of these strong names. Where is that money going to go? It's going to go to where to the best deal sector wise. And right now, healthcare is that space. And we're starting to see that where as of, July, healthcare was in this range, this broad 20-point range. And then recently, we see it step up and we see buyers step up here and we see this tight flag forming. So this isn't going to be, it's going to break 260 and never look back. It's a major sector. It's going to have these ebbs and flows. But the focus over the next coming weeks, if we get some weakness from the leaders like the tech names, this is a sector to keep a close eye on. So we're going to move on to some top ideas. On my end, our buddy John Dominguez has talked about this HLT, Hilton Worldwide. We can see this resistance area at 280, puts in that high. Recently, like we saw with healthcare, we see this consolidation, cannot break 280. Had a pretty crappy day on Thursday. Friday kind of reversed back. But our key focus is only caring about if or when this 280 breaks and closes above 280 to the upside. So if it wants to continue to flag out here, amazing. Only concern is buying above the break of 280. Names that I'm in. Main one has been this Walmart. Again, we've done very well with this name in the last month. We had a nice trade in it through that 100 breakout back in the beginning of August. We got that nice $5 move here. Name pulled back in. We can see this 96 area was or has been resistance, as it's more broadly flagged out for the last few months now. And then we saw a few inside days here and we bought back up through that break up through support. So you got a nice entry through that 96.60, not through 97. Very nice entry, dollar risk. This name is, traded, what do we got? 2, 4, $6 plus higher on a dollar risk. So already 6-to-1 risk reward. Have a stop under this little pivot low. And this range up here, this 103 to 105, has been resistance. Eventually we'll see a 105 breakout down the road. But for now, with what we're seeing in the markets, we're seeing this tiny shift into more range bound trading as the market's banging on resistance and can't break out higher. The focus has been looking for these support buybacks and just trading the range, buying off of support and selling into resistance selling into this resistance area instead of trying to buy this breakout. So for now, just trading the range. And again, down the road, it could be another month or 2 months or three. Eventually, we'll be buying this blue sky breakout in Walmart through 105. But for now, we're just taking advantage of, the short-term volatility. So we have, we'll run through a couple names. Again, keeping a close eye on this NVIDIA here. Again, for tech, if NVIDIA breaks down through this flag to the downside, through this 160 area, that's going to confirm this was a topping pattern and not a bull flag. And if we see weakness in NVIDIA, you're going to see that domino effect in the rest of the tech names. So keeping a close eye on that. Again, if it doesn't break down, continues to flag out, we have that blue sky breakout through this 180. Still looks fine. This consolidation looks great, but just keeping an eye. If it breaks below support, tech's going to be weak, breaks above it, blue skies ahead. We got this ACLX, nice little base forming here. I'll move this line a bit more. We can see this major base has been forming all year, getting much tighter here compared to, where it was back in April. So nice tight consolidation here, keeping an eye on this 74 for this stage one base breakout for a move back to, 90, 90 to $100. KNSA was a big picture alert from last week through this 34. Again, you can see very tight consolidation near its highs. We bought up to 34 and it's hit our short-term profit-taking target based on the measurement of this flag. Again, it looks phenomenal. Probably still continues higher, but just the first alert on where to take profits in that name. Next, we have this DRI, which is one of Abby's top ideas from a few weeks ago. Finally starting to poke out of this bigger base here. Looks great. If you're in it, stop first at 207 seems to be the spot for right now. This AS still needs some time here. Nice 40 level, broke out on big volume this day here, but it's faded back into this range. Again, we're seeing this range bound trading like we're seeing with Walmart and some other names where we want to be looking for these support buyback entries. So if this name has to come in, maybe shake out 35 and turn back up, we can look for the entry up off of support instead of having to buy 40 and buy it perfectly. So that's the emphasis. Again, this Tesla, it's been a big focus for a lot of traders. This 360 is the key level in this breakout. Again, there was a tighter wedge forming in the name, but this 360 is the key breakout level. So we want, again, still wide range here. Supports down to 320. So no need to rush into this. Let it pull in, let it set back up, but just be ready for that 360 breakout. BSX, healthcare name, big blue sky breakout forming here through this 108. It's been kind of, pushing through the area, but just not really getting the volume. We're not getting that real close above that 108 area. Probably needs to pull back in a bit, maybe even shake this 104 area, maybe even come back, down to 100 before it's really ready. Again, if we're not seeing the break on bigger volume at this level right now, expect that little fade back into this range and just be ready for that move, a week or two from now. But really great chart. Again, once healthcare really gets going. MOD, another blue sky breakout, nice textbook earnings flag that's been forming. We can see this name couldn't break this 146, couldn't break it again, gets destroyed. Bases out, nice earnings, gap up, flag, and now just waiting for that break of that 146. So another good one to keep on the radar. This Lin, again, this is a good example similar to that BSX. We were looking at this Lin through 480 and we did not get that break with any volume when it's ticking that new high. So we knew to get out, and this was kind of the arrows I've been drawing. This was back in middle of August, expecting that pull in, and we see we get no real follow through here. It's starting to pull back in. It's starting to base out again, and when it starts to turn back up here, maybe in October we get that next chance to buy this through 480, and then it finally has the volume and the momentum to really push the thing higher. Again, we're seeing this with PII. Again, we're seeing a lot of these major levels for these big breakouts or big stage one base breaks, and just no follow through. There's no one there willing to buy these breakouts. So just we're seeing a little bit of these orange flashing lights in a lot of these setups where just waiting for, being patient on the market and, not going too crazy with these breakouts because we're not seeing the volume there. We're seeing nice patterns. We're just not getting the volume. And that's where we've made this shift in the last few weeks, focusing on those support buybacks, focusing on the names that are pulling into support and waiting for that turn back up through support instead of these breakouts that just aren't getting the volume. So we got one more. We'll go over with it. MLM. Again, another major blue sky breakout here. We can see this is going back to beginning of 2024. Cannot break this 625. Cannot break it again. Pulls in nearly 200 points. Gets all the way back up here. We're seeing this tight consolidation. But again, we're seeing no real follow through on these breakouts. Breaks to 625, goes $2, comes right back. So we're not seeing the real follow through on these breakouts. And we're seeing these little warning signs. The market looks perfect, market looks strong, but as these consolidation periods get tighter and tighter, it's hard to get any substantial moves higher in the market. If you even look at last time we were at highs or in a similar range, end of year, this is a 30-point plus range in the index. It's really, there's actual, fluctuations in the index for months. Look how tiny this consolidation period is in retrospect. Look at how little this range is compared to this range. So when you have big ranges like this, you get big moves. When you have these little ranges like this, you get these inconsequential little moves higher. And that's why we're not seeing a lot of follow through in those breakouts. So again, not really expecting this type of move because there's really no major fear in the market. The tariffs are so old. No one cares about tariffs anymore. The only thing now is going to be interest rates, and the only thing Powell is going to be doing is lowering them, which is just going to propel the market higher. So there isn't a big fear in the market. If he doesn't, maybe Powell doesn't drop rates, this month or next month, and maybe we get that little shakeout, little correction that we need, but we just need the market to, trade in, more of a broader range to give us that next push higher. Right now, we're just not getting it with these really tiny ranges. So hopefully this was helpful. If you guys have any questions, put them in the comments below, and I'll go over them in the next chart talk. Thank you for watching.